All right, let's get right into it. The buzz around artificial intelligence right now, it is absolutely electric. You hear it everywhere. It's a once-in-a-generation opportunity, a new industrial revolution. And it feels a lot like 1998, back when everyone knew the internet would change the world. And you know what? They were right. But that didn't stop a massive, painful bubble from bursting. So the billion-dollar question we have to ask is this time really different?
You've probably heard this quote before from the investing legend John Templeton. It's the perfect way to frame this whole conversation. Because while history doesn't repeat itself exactly, it sure does rhyme. And thinking that the old rules don't apply anymore, well, that's a surefire way to make a very, very expensive mistake. So let's look at a pattern we've definitely seen before.
I mean, remember the dot-com bubble? The hype was just off the charts. People were throwing money at any company that had .com in its name. But then, in 2000, the party came to a screeching halt. The NASDAQ crashed almost 80%, wiping out fortunes it felt like overnight. And get this, 2 years later, less than half of those .com companies even existed anymore. The stakes in these manias are incredibly high.
Okay, so here's the game plan for today. We're going to break down what's really going on with AI. First, we'll look at the massive bet being made by the Magnificent Seven. Then, we'll investigate the kind of strange way money's flowing through the industry. After that, we'll explore a huge problem AI is about to run into. Then we'll ask the big question, is this a bubble? And we'll wrap up with a solid, actionable game plan for you.
So first up, let's talk about who's driving this train. You know, the fate of the entire stock market right now is pretty much being decided by just 7 gigantic companies, and they are locked in an all-out arms race to dominate AI, and they're spending an absolutely insane amount of money to win.
The concentration of power here is just staggering. We're talking Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and NVIDIA. Together, the Magnificent Seven now make up 36% of the entire S&P 500. Just think about that for a second. Even if you're just passively investing in an index fund, thinking you're diversified, you're actually making a huge concentrated bet that these 7 companies are going to win the AI race. Your portfolio is tied to their fate.
And just look at the cash they are lighting on fire to do this. We're talking about a combined total of over $330 billion in planned spending in just 1 year. To put that in perspective, that's more than the entire economy of a country like Finland. This isn't just an investment, it's a technological war. And the spending is so massive, you could argue it's what's propping up the entire US economy right now.
So, with all that money flying around, you'd expect to see some pretty amazing revenue numbers. And on the surface, you do. But our second big warning sign is about where that revenue is really coming from. It's kind of like a shell game, what some are calling the AI money machine. Let's break down how this thing works. Okay, so follow the money here. It starts with Microsoft giving billions to OpenAI. Then, OpenAI turns right around and pays a huge chunk of that money back to Microsoft to use their cloud servers. Then, Microsoft takes that money and uses it to buy tons of chips from NVIDIA. And then, to complete the circle, NVIDIA invests some of its profits back into OpenAI. Now here's the kicker. Every time that money changes hands, a company gets to book it as revenue, which of course helps pump up their stock price.
Here's a super simple way to think about it. Imagine I pay you $1,000 to dig a hole in my backyard. Then you turn around and pay me $1,000 to fill that same hole back in. Did we create anything of real value for the outside world? No. But on paper, we both get to say we made $1,000 in shiny new revenue. It's a system that can look really impressive, but it might just be the same pot of money going around and around in a circle.
This has created what you'd call a classic gold rush scenario. You've got companies like NVIDIA who are selling the essential shovels, the computer chips, and they're the biggest winners by far. I mean, their stock is up over 1,600% since ChatGPT came out. They sell to everybody. Meanwhile, companies like OpenAI are busy digging, but they're still losing money every single month. The folks selling the tools are getting rich, luring everyone to the gold rush, but very few have actually struck gold yet. And that brings us to our third and maybe the most fundamental warning sign of all. Baked into these sky-high stock prices is this idea that AI's progress is just going to accelerate forever. But AI is quickly coming up on a very real physical limit. It's running out of food. It's about to hit what's called the data wall. Just take a look at this. For years, these AI models have been just devouring every book, every article, every public bit of data online. And this chart shows that by 2027, AI is projected to have consumed nearly all of it. See, AI's incredible improvements have been fueled by centuries of human knowledge. Once that well runs dry, where does the new progress come from? And this really gets to the core of the problem.
An AI learns by just ingesting data that already exists. But humans, we learn by interacting with the world, by having new, unique experiences. An AI can't go live a life. It can only simulate knowledge based on the data it's already been fed. So getting past this data wall isn't just about finding more data, it's about needing a fundamentally different kind of data that might not even exist.
So, after looking at the super concentrated bets, the weird circular revenue, and this massive data wall that's looming, we've got to ask the big question. Is this an AI bubble?
Well, if you look at the classic signs, they're pretty much all there. We've got massive overvaluation of assets. We have potentially inflated revenue. There's a geopolitical mania between the US and China driving investment. And there's a clear scaling limit on the horizon. Now look, this isn't exactly the same as the dot-com bubble. These AI companies have real products. But the hype, the FOMO, the financial dynamics, it's all rhyming with history in a way that should make every investor pay close attention. It certainly looks and feels like a bubble.
Okay, so if we might be in a bubble, what on earth are you supposed to do with your money? Panic? Sell everything? No, absolutely not. The key is not to predict the future, because nobody can, but to prepare for it. So let's walk through a simple game plan to navigate all this potential mayhem.
So here it is, a simple three-step strategy. Number 1, keep investing. The best way is through automatic monthly investments into a broad, low-cost index fund that takes the emotion out of it and you just keep buying. Number 2, focus on increasing your income. Your income is the fuel for everything. The more you make, the more you can invest, especially when assets go on sale. And finally, number 3, and this is probably the most important part, you have to diversify.
So what does diversification actually look like? Well, it's pretty simple. You don't put all your eggs in one basket. You spread your money across different kinds of assets that all act differently during market swings. So yeah, you've got your stocks for growth, but you balance that with the stability of bonds. You might add a hedge against inflation like gold, the real-world value of real estate, and maybe even a small, speculative slice for something like crypto. The goal isn't to pick the one perfect winner. It's to build a tough, resilient portfolio that can survive the chaos and let you come out stronger on the other side.
So here's the bottom line. A bubble bursting is not the end of the world. In fact, for the investor who is prepared, it is one of the greatest opportunities to build real wealth. While everyone else is panicking and selling at the bottom, those who have a plan can take advantage. The next crash is coming, whether it's sooner or later. The only question is, will you be ready for it?